Mic test. I think everyone can hear me loud and clear. Good evening, everyone. Great to see you guys back in the stream. Okay, today will be more focused on the educational streams. The reason being is like I do get a lot of inquiries, like asking a lot of like how do we find the trade and everything. So what do we do next is there will be going to be a lot of uh, educational content. The reason being is to help you guys. It's that simple. Okay, so first of all, let me try to find something easier to say. Okay, so the main thing I will touch on for today is like finding a trade with having these 5 step to find a trade. Okay, so these to let's make it simple. Give me a second. So the logic, the steps to find a trade, higher time frame, bias. Okay, so there will be a couple of things to touch on for today. I think I should record this session. Okay, give me a second. Okay, sound check 1 2. Should be okay. Okay. So first of all, I think is it too small? Okay, so I think this is clear enough. So the logic behind to find a trade is like you need a story about it. Okay, why do I say so? First, you need to find a bias because trading is about like the price is going up or going down. Is it going to take a buy setup or a sell setup? Am I right? So from the bias itself is pretty important. Yeah, like where the price is aiming. Okay, like for example, I'm seeing this. The price took off this low as the previous low liquidity for our low as the liquidity, and then rejected up. So the next draw on liquidity, the bias is long to take out at least this high. Then maybe we will wait for it. Okay, so for the time being, I want to do a quick scalp on longs. Like for example, like this. We have this draw on liquidity, right? We have this draw on liquidity. Then eventually the price just break off this zone, going to longs, aiming at this buy side liquidity, and at the same time it is a liquidity area I marked out earlier at a lower time frame. So the first one you can say, okay, maybe it could reverse, take just as a liquidity sweep, then it's going to continue lower, but it didn't, it just continue up. The second one you can just take off, so you have the long bias. Let me go back there. Okay, so the first thing, okay, take an emoji, nope. Okay, so we have this bias. Okay, the first one is bias. Okay, we have the price is aiming for. Second is the story of price action, the narrative itself. So the narrative, how do we uh say it? Okay, for example, like let me make a replay. Okay, from here, the price did took off a drawn liquidity, right? What does it tell? Okay, the price somehow is still closing in below this drawn liquidity, which means the price has a very bearish momentum. Am I right? But what do we see here? We have a accumulation area right here. So this leg could be the manipulation if this whole leg is getting disrespected. Okay, but let's see for the second candle. Okay, it didn't broke above, so we have this 5-minute fair value gap, right? So we want to see this latest fair value gap to respect to continue lower. Okay, the price just stayed in and rejected off. So we currently potentially having this BPR right here. Okay, this is what what's the story is. If the price just close above this high, then it could be a continuation pump all the way to this high itself. Okay, do we wait for it? Okay, we have this 5-minute BPR respected very well, where the price closed here but didn't close above here. But in a lower time frame, the initial inverse fair value gap has been formed. Okay, this is the thing. Okay, so the moment when we see this, right, what do we do? Okay, we have this fair value gap respected. Okay, we can say, okay, maybe it's just a fake, but the moment the price disrespect this bearish BPR right here, this should be the confirmation of entry already. And the moment it break off this high, which is the CISD, this is also the CISD. Okay, so this is just the new OB already lah. Okay, so the moment the price break off right here, did we get a retest? Okay, the price failed to break. Did it come back? Okay, yes, it does come back. So this area is very crucial that the price could just continue higher. Did it break through? Haven't. Okay, yes, it is breakthrough. So there is the confirmation of the bullish momentum will continue to break off, continue higher, at least disrespecting this 5-minute fair value gap right here in this range. So this is the story about it. So how do we get the entry model from where we are right now? That is this the entry model, the context. So the context is how do we get our aim? Okay, let's say we are currently is aiming this liquidity area, right? How do we get it from where we are earlier to all the way high, all the way to that high. Okay, is okay. We have our story behind here, so we are going to scalp bullish on this. The reversal is also valid, and we will see the moment the price just disrespect this as an inverse fair value gap. Okay, the price retest in the zone. Okay, no matter what, the moment the price break off here, this is a new fair value area. The whole range here is the fair value area. So no matter how the price just break off, then come back in the zone, it is still valid until this low is broken. This will be the protected low. So how do we get an entry? Easy. Okay, it's either you use let me type it out. Entry model use. First type is, let me think of, some people use OB, some people use fair value gap, some people use breaker. Okay, order block. Okay, what else? Okay, so this is the thing. So let's touch on these three first, so without confusing you guys. So the entry model you actually can be looking is the order blocks retest, the fair value gap, the breaker blocks. Okay, what do I say so? Okay, how to identify a order block is the range that respected of, like for example, this range of this whole range right here. Okay, the lowest of the point and the high that created the low, which is the previous high of this low, you can say is this. Okay, so this is the OB. Okay, the bullish OB, so I put plus OB. Okay, the moment when the price retests here, what do we do? The price retest, it must reject with a wick, but if the price just close inside this order block, range, then we will need to observe, will this low be respected or get disrespected? Okay, so from this point of view, how do we see respect or disrespect? So a respecting candle, it should looks like this. Okay, which is the body candle did not close inside the range, it just rejected off with a wick. The longest it is, it mentioned, it means that the price is respecting very strongly. Okay, so we have this first OB. So what is the fair value gap? So in every single setup, right, in a single market structure, we have a higher high, higher lows. All those higher highs, higher lows without um, fair value gaps, right, is just ranging, just range high and range low, range high and range low. So if you want a market structure to be valid, right, it requires a fair value gap. Okay, for example, like currently we found an OB, the order block, and we want to find the we want it to align with the fair value gap to be valid. Why do I say so? Because every single market structure, it requires okay, all everything about price is about premium and discount. Okay, Um, hmm, let me see if I can type it out the context or not. Okay, credit PD array matrix from Google. Okay, just to zoom to you guys. Okay, so every single structure, right? Okay, let me drag it. So if you want to see from this structure, so from this low to this high, what do we have? Let's start from the below one. If we are bullish, we have to see the every single structure, there will be a old low or high, and the rejection block, bullish order block, a fair value gap, liquidity void, bullish breaker, a bullish breaker, and a bullish mitigation block. Can you see right here? Okay, so in this structure, what can we identify? First of all, these old lows, old highs and low. Okay, done. The rejection block, then the bullish order block, which is right here. Then following the bullish fair value gap. After the fair value gap, we have a liquidity void. Just ignore the liquidity void for now, as the example is not found and valid in this example. And we have this bullish breaker right here, which is the previous structural high. Okay, yes, indeed, we did broke it off, and then the bullish mitigation block. Okay, so we have all this. So on the bearish side, it will be the same. Okay, so back to the question. This one I will be touched on. It will be a recorded session. We're trying to make more short videos. Okay, so back to the entry model. So how do we enter off this? Wait, give me a second. Okay, let's say you are entering from a OB. Your strategy is OB. You use OB the most. Okay, so what you should do is just stick with the OB. If without OB, then you just don't trade, don't take it. Okay, like you see the first one, your entry model, you need a OB with a fair value gap. Okay, yes, we have a OB, we have a fair value gap. Now we are waiting the price to come back into our OB range. So what we can do, what can we do is then place it at maybe about 1:2. Okay, yes, eventually we hit it. Okay, so secondly, if you miss out the first one, okay, you need two confirmation. So if two confirmation, what should you do is, okay, mark it out the previous structural high, the range of it. Like for example, currently you have this range of OB. Let me mark it out. Okay, let's remove this. Let's remove this, and this. Okay, so from this point of view, you can see, did the price just break off the previous structure or just the high itself? Yes, indeed, we have a fair value gap in between this range after the OB is out. So the price is still in the OB range. Okay, so eventually you can just, okay, the price, the moment sting in and aim towards 1:2. Okay, this is the OB range. Okay, so the price, see how you can catch this trade. Imagine that this is what you are doing. Is like, okay, you stick to the plan. I just trade OB. Okay, OB fair value gap. Okay, I want to find a OB with a fair value gap. Yes, indeed, there is a fair value gap out. Good sign. Then we are coming back into this range of order block. Then we are continuing higher. Yes, we found it again. If you have two position running, you can set one as the ultimate TP. It could be a 5RR, could be very nice, and call it for the day. So this is the entry model that you can use. So the order blocks. So if you are using, so this is the first one. This is the example of order blocks. So if you are looking for the entry for fair value gaps, what should you do? Okay, and this is the most used uh, for my setup, most used strategy. Okay, so first of all, I just coming up next on the strategy itself, it will be using fair value gaps only. Okay, so from this point, currently we seeing this drawn liquidity. How do we identify the reversal? Okay, from the 1 minute time frame, after taking out this drawn liquidity, we did not find any clear sign of um, a reversal, anything from this range. Okay, it looks like a bearish continuation, a break off right here, but eventually the price just sweep. Okay, and the price just broke off the high itself, the high that created this low, this low. Okay, and then the moment the price close above this, okay, it's an early sign of what that's called reversal. Okay, after this, the price just created a fair value gap. So when we have a bearish fair value gap and a bullish fair value gap, which means the balance price range. So balance price range equals to BPR. We have this BPR to identify a reversal. Is that clear? Okay, I think it should be pretty clear from here. So a balanced price range is a, if you are looking for a reversal, it should be a bearish fair value gap. Then the next one will be a bullish fair value gap. Okay, if you are in the bearish side, it should be a bullish fair value gap first, then a bearish fair value gap out. Okay, so this is the difference. okay, from a bullish side and a bearish side. So we have this BPR. So what can we say? Okay, the first BPR maybe potentially is not that clear. So what can you do is we want this BPR to get respected to continue higher and should not close inside this range. Okay, so the secondly, the price just down massively. Just take out this high. So it is quite concerning, right? Yes, I know. So from this bearish side of fair value gap, the price initially just disrespecting, and it just broke off the high itself, the high that made of this low. Okay, and the price have a very tiny fair value gap right here, but it should be just continue higher, but the price did not. The price decide to sweep this high and just reverse all the way down. The reason being is, if you know more in depth about PD array, right, you can see this PD array, where the price respected is the order block range. As you can see, everything is all aligned. Okay, this is the order block, and this is the order block range as well. The order block range. Then the price eventually just just disrespecting this bearish fair value gap and just continue higher. If you are looking for to take off the inverse fair value gap, you can just take off from here the moment the price close above the high itself, then you can just take it off. Okay, it will just continue pump all the way up there. Okay, so this is the take. Using the BPR stand for a reversal. If a continuation trade, you can just take off the fair value gap. For example, like this. Okay, we have this huge range right here. Okay, but we have this fair value gap resting right here. So you see how the price react from here. Let me remove this. It's a little bit messy. Okay, the swing high itself. Okay, yes. This high itself, the CISD, is also aligned with the fair value area. Okay, the price just came back into the range that broke off the range high, and then we have this fair value gap where price could just come back into a fair value area to get the sellers to fulfill their orders into the buys, then rejected off. You see how fast the price react in just instance. Going to this protected low, 1:2, 1:2 trade. Yes, it run very pretty well. Okay, so the price just came down maybe about 6 pip. Okay, price came down for a 6 pip and then just continue pumping up, and you see how the another 1 minute fair value gap form off here, and the price came back into this fair value gap, gap and fair value area again. And if the price is respecting the fair value area or fair value gap, it will be rejected off with a wick instead of a body closure below. Like here, the expansion did not created any of the um, fair value gap next. Then we have to be careful. Might this low will be the liquidity, or this low will be the liquidity. Eventually, yes, this low is the liquidity itself. The liquidity itself, then we'll see this will be the new protected low. Okay, After the sweep, then the new fair value gap form again. So you can just so on and so forth, continue to take on the trade right here, adding more positions. You can see adding more positions right here, right here. One is to two. Yeah, as you can see right here, one is to two. Everything is just run pretty well once uh, we have the right buyers, right context, and right narrative, the story about it, and the context itself. And we just need to add on the thing is called our entry model, okay, and the breaker itself. So last, let's move on to the breaker blocks. So what are the breaker blocks? Is the break of the actual structure. So let me remove this. Okay, now we see we have this OB level, correct? Okay, so what where is the high that created this low? Is this high? Am I correct? This high. The moment the price just break off this high is called breaker. The high itself, the high that sweep the low. Okay, remember this, huh? Another example, like from here, you have this respecting candle. This is the OB. Where is the breaker? Here. Did the price close above here? No. So the price just broke off here, aligned with a fair value gap. And here, issue expansion off instead of coming back. But no matter what, a range of protected low will be the protected low as always. So this will be the BB. So this will be the BB. Okay, which is you can say so is the low that sweep the high. Okay, sorry, the high that sweeps the low, and for bearish one, the low that's the high that sweep the low, then the low that sweeps the high. Okay, like this. Okay, this is the breaker. So okay, I think it should be very simple. You guys just need to train more in your eyes and see what is going to be happen, and you will look into it, and this should be easy after more and more practice that you have been done. And what else? Let me see if I have to touch on anything else or not. Okay, so after that, we have the entry model done. Next thing is we want the risk management. So on the risk management side, risk management, let's say you are risking 100, you want to risk $50 for this trade only. Sorry, let's make it 100, easy to calculate. And your SL is 100 pips. How much would you be risking? So you just take 100 pip, sorry, your dollar value itself. Let me see, what is this called? Ticks. Okay. So the ticks itself is 1000 ticks. So you take $100, divide by 1000 ticks equals 0.1. That's lots. So this is your actual lot size that you need to key in for a 100 pip stop loss. Okay, so if you are risking on this, how much would you lose once you hit the SL for a hundred pips? It's just $100. Okay, so it's that's easy. So if you are risking example one and example two, let's do another example. Example one, another example. So let's say you are risking for $50. So you're risking $50. Your SL is about SL at 50 pips equals to 500. I think I make it 100. Easy for you to calculate. 100 pips equals to 1000 ticks. So you take your $50, divide by 1000 ticks equals to 0.05 lot size. If if you place 0.05 after hitting your SL 100 pips, how much will you lose? It's just $50. So it's the same thing, so on and so forth. This is a mini hack, not hack, sorry. I would say tips that can help you to calculate faster based on your lot size. And this will be all for the risk management side. There is a lot of psychological and mental mindset that you need to fix to manage your risk management, because a lot of things that requires a lot of disciplines, consistencies. It's all about psychology. It's not just like trading. Oh, I find a trade, I just execute. That simple. There is a lot of mentally exhausting um, mindset or emotions that you will go through a lot as a trader. Okay, so okay, let me stop the recordings first. Okay, so back to the question, some question. So we have the steps to find the trade. Like we have the higher time frame bias, like how we aim the 4-hour time frame. Excuse me, aiming the 4-hour time frame. This liquidity high, and the price just eventually just dump from here. So there is a sign of reversal right here, respecting a premium levels, which is 5-minute fair gap is forming right now, which is a good sign. Then we can say a sweep of a liquidity high. Then we have this range, then dump all the way very nicely right here. The entry will be the respecting candle right here. Then potentially we can just aim for another range low right here. This is the previous daily low, so this is what we aim for. You can take off the trade right here. So we have a higher time frame context. The price wants to long. Price wanted to long until this liquidity area. This liquidity area. Then eventually price just reverse. Did we get a SMT? Let me check. Okay, indeed we have. The price sweep of this on silver, price did sweep off the first high, but gold didn't. So relatively, selling momentum, the gold has been stronger compared to the silver itself. So the moment the price just created this huge breaker right here, the moment respected and just continue dump, I think this low won't be holding because every engineered uh, swing lows, right, are the drawn liquidities. You can see it right here. These are all the liquidities. As you can see, the price took off this low, just rejected very strongly. Took off this low, rejected quite strongly as well, and just closed below. Took off this, rejected also very strongly. So so you can see it from here. So every single engineered liquidity, like the swing low created, right, are all drawn liquidity. Don't doubt it. You just go back and try. Deep dive into the chart. You can see a lot of like different thing, and you will realize a lot if you spend a lot more time onto the chart, on your chart. Okay. Um. Okay. I think today will be pretty much that's all for me. I will see what I can do to make the short videos. Um. Okay. I think let me figure out that and share with you guys in a bit. Okay. I think I shall end the streams right here. I hope the sell trade is going well for everyone. At least this low will be broken, then we will see this low. Ultimately is this low. Okay, I hope everyone trades safe for the night and seeing such beautiful price action. Okay, I hope everyone have a good night, trade safe, and I'll see you guys maybe on the next stream. I might not be available for the next few days, but if I'm coming up for any stream, I'll just contact you guys again. Alright, thank you, have a good night, goodbye.